Imagine having exactly 72 hours to design an emergency financial relief program after a massive natural disaster with zero precedent, complex compliance rules, and no data on where your clients actually live. How do you pull that off using generative AI without making a single bad bet? Welcome again to Talent Thrives Here, the podcast where we unpack playbooks to top industry leaders who build, innovate, and drive real commercial impact. I'm your host, Lance LeFort of LeFort Talent Group. We're a recruiting firm. We work with clients across North America. Today, I'm blessed to sit down with Alan LeClair, a heavy-hitting product management and strategic partnerships leader in the San Francisco Bay Area in the fintech space. Alan, welcome to the show.
Thank you so much, Lance. I appreciate it. Thanks for having me here today.
Great. I've described you, and I think I've heard from others. You're a master at taking these complex financial ecosystems and cross-functional friction and emerging tech like AI and advanced analytics, and you turn them into a scalable opportunities, sometimes multi-billion dollar opportunities. And for our audience, if you've ever wondered how product leaders like Alan bridge the gap between human empathy and cutthroat business metrics, you're in for a treat today. Alan's going to share with us how he used AI under extreme time pressure to deliver crisis relief for wildfire victims and how fixing a single back office operational flaw protected retirees' living expenses while unlocking massive portfolio growth. So stick around. Alan, again, thanks for being here. I'm going to jump right in here. Let's dive straight into the high stakes of early 2025.
Yeah,
Devastating wildfires, as you know, and it was in the media everywhere. Southern California was on flames. And you were at AssetMark. Your leadership wanted to roll out there the emergency loan relief as quick as they could. And
that's right.
my understanding is you were given just 3 days, three business
Y-
days to figure out a plan, right?
Yeah. It was a very short time frame. The wildfires had just happened January 2025, and this was roughly maybe February or March, and people were coming to their advisors and saying, "Hey, I need to sell my assets in order to fix my house," and that's the last thing that they want to do. That's going to trigger a taxable event, and it's the last thing the advisor wants because they want to keep to the plan and keep the things invested. So leadership wanted to explore this kind of emergency relief option for affected clients. The idea was to help them rebuild their homes with some kind of reduced loan pricing, and I was managing the lending world there, so that was then dropped onto me. The obstacle here was that there was no precedent for natural disaster relief support in the firm's history. As you said, the timelines were tight. Just they wanted it back in 3 days. So I put together
Wow.
a plan. The challenge is we've never done research. First thing I need to understand is what do clients consider to be their home, right? Because a lot of
Mm,
these people are high net worth. Many of them had first, second, and third homes, sometimes even four homes. And in addition to that, we had no data on which areas would be considered, burn damage, like which areas, some of it could have been smoke, some of it could have been actual physical flame. Like where are we drawing these lines, right? So I used AI to help me define the counties and zip codes that were significantly fire damaged.
mm.
And that ended up being kind of tricky, but without AI, it would have been really, really difficult, right? But because some areas were like slightly impacted, you had to kind of gauge how much impact you wanted to go ahead and show. But then after that, I met with business intelligence and organized the client home data. And what we ended up doing is deciding on first and second homes as qualifying for the location relief, right? And then after doing all this research, I developed four prototype scenarios for the lending relief. Each model was looking at different uptake estimates. And then I had to align stakeholders across sales, legal, and compliance. And then the final action there was to present kind of iteratively to leadership the scope of each response. Some things were moderately reduced in price, and some things were like severely cut in price. In fact, one was all the way down to zero
Wow.
income for us. For it would be like a 12-month period of essentially very, very low interest on their loan.
Right.
And so the result was that I was able to deliver this innovative wildfire relief product in the time frame 72 hours. It included three pricing level options, predicted revenue impact to the company, It was, and most of all, what was really is it really helped the advisors be able to go to their clients when they came to them and say, "Hey, we have this product for you. You don't have to sell your assets. You don't have to trigger that taxable event."
Right. Right.
Yeah, and the CEO was thrilled with it.
Yeah. And prior to having the sort of AI implementation, would that have taken you weeks to gather there more people on the like as far as bandwidth and getting it
Yeah, oh
done?
yeah. We would
Yeah.
have had to have a team like and I guess maybe we would have, the other thought in my head was somehow to contact like fire relief or fire groups in that area to have them report back to us what they consider to be fire damaged,
Yeah.
right?
Yeah.
That would have been the way I guess we would have had to do it, but that would have certainly taken more than 3 days.
Oh, that yeah, that's what I was thinking. It would have been yeah, a much bigger time commitment for sure. Yeah, and
Yeah.
probably a lot of lost sleep.
Yeah, yeah. No, it was a great challenge, but really fun to be able to step up and work
Yeah.
with the salespeople. The client experience is always my first starting point, and that really, really improved the client experience for our folks.
Yeah. And correct me if I'm wrong. I think that like you're often probably the hub and the wheel, right? There's various stakeholders and you're
Definitely.
kind of the translator of whether you're talking to tech or finance or client or product and you are that central. Am I correct in that?
Yep. Yep,
Yeah.
that's right. Some people call it the quarterback, kind of the central hub to keep everybody in alignment and going forward, kind of holding the vision, the long-term vision for it.
Right, right. Excellent. Good. Well, why don't we jump into story number two? Because early on in your work with securities-backed line of credit, you uncovered an operational flaw where retirees they were relying on their monthly payments. They're suddenly seeing their checks fail due to some paperwork glitches somewhere in the system. How did you redesign those rules to protect the clients? And how did that contribute to driving the portfolio up by, correct me if I'm wrong, I think it was like something like $700 billion.
Yeah, that's right. It was a big, big increase. So a systematic withdrawal plan. So our securities-backed line of credit relies on the securities in the account as their collateral, right? But retirees, the reason we save is to be able to pull that money out in retirement. So they generally set up kind of an automatic payment. Let's say it's 10,000 a month that comes out. But the problem is that automatic withdrawal reduces the amount of collateral for the securities-backed line of credit, the SBLOC lender. Before my time at the beginning when they were rolling it out, their solution was to say, "Hey, we're going to look at the margin on the account and we're going to grant a 1 year for this SWIP, systematic withdrawal plan, to happen. But at the end of that 1 year, client and advisor, you need to come back to us and reapply, right?"
Mm,
And so the idea was the advisor would set a calendar reminder to do it, but they never did, right? Everybody forgot. The client forgot, the advisor forgot. And then come anniversary date, August 1, we're right here. The client doesn't get their money. The money just doesn't appear. It's an automatic deposit in their account. So now their, mortgage, all their payments are started, it made the client very angry, and that made the advisor angry with us, the company. So I spent some time early on with teams and uncovered that issue. Many end clients, like I said, were retirees and they lived on this thing.
mm,
Um, the obstacle there, again, was that the lending partner required they need some of that collateral. I assembled across the action there was that I assembled a cross-functional working group across our vendors credit and operations team, as well as the asset mark operations and product side. And together we kind of redesigned the rules. We created a margin-based formula allowing these things to auto renew. The good news is that our vendor was is a fintech. It was is and was a fintech company, and they have real-time data. Not only do they know daily what's going on with the assets in your account, Lance, they know minute by minute.
right.
So they have the ability to kind of monitor that real time. So
Mm,
we set it up so that when this each month they would look at it, and as long as there was enough buffer, it would just auto renew. Now the question is, and that satisfied like 98% of the issue of the cases. Now, for the ones that didn't, what they did is they built in we built this proactive notification workflow for both the advisors and the clients to receive advance warnings. So they got at least 30 days. Usually it was kind of a 60-day notice to take a look at it and see what they wanted to do, to address it, whether to put more securities in the account or reduce the line amount. There were lots of options to be able to cure it. So the result was this new system enabled 98% of these SWIPs to just auto renew. Like it
Wow.
became autopilot. Yeah, it was really great. It eliminated the surprise disruptions.
Yeah.
It improved satisfaction. Um, yeah, the advisors regained the trust in the product. So that was another thing. Like
Yeah.
we want more people to be taking out securities-backed lines of credit. And this was an impediment, right? Lance, you're like, hey, I
Yeah.
have this automatic withdrawal and the company is going to make this difficult because they don't want the withdrawal, so I'm just not going to do the line of credit. That was the opposite behavior we wanted to encourage, right?
Yeah. Yeah.
Um,
Yeah.
so yeah, yeah, and it showed the client. It also helped improve the opinion of the advisor because now the client says, "Wow, this advisor is so on top of this. I'm getting a notice ahead of time, right? If there's an issue, right?" So it was a win across the board, a win for all three parties.
Amazing. Great. Um, and I'm just curious, when you're working on that team, where there, again, is it, are you the focal point? Are you working with multiple people to sort of do the analytics on that and figure that out? And did AI tap into that as well, or is that more traditional kind of just, spreadsheets and digging through data and
Yeah, good question, Lance. Yeah, there were a lot of I was organizing stakeholders on our side, Asset Mark side, but also on the vendor side too, right?
yeah,
Because we needed all of our people to roll up our sleeves and put our heads together. Um, the AI piece, the smart piece was on the vendor side, right? That real-time data. They had each security, the number, anything going on with that security. They were the AI piece that was monitoring that thing real time. So it allowed us. A more traditional lender would look at it, someone would have physically reviewed it, a human being would review it like once a month, right? It would be much slower. And then they would need to build in a bigger margin to be able to accommodate. I mean, if the market goes down, I mean, we've had the market drop 20% in a month, right? That happens.
yeah.
Uh, and so they would have to build in a buffer far larger to accommodate that.
Gotcha. Gotcha. Great. Look, I know that you are on the hunt right now for either a fractional contract type gig, or even a full-time thing. Um, you're probably in the San Francisco Bay Area. Am I correct in that sort of in your hood?
Yeah, yeah, yeah. I'm in the Bay Area. I'm a people person. I love helping people make better decisions. Every job I've had has had something to do with that. I started in psychology. I was going to be a psychologist, and then spun into the business world and help people make better decisions around, how they're going to go about their life financially. So, yeah, I bridge that gap between financial technology and kind of high growth commercial strategy. So I look at consulting gigs engagements or full-time engagements are great too. Yeah, whatever lines up best, whatever satisfies that need, the client need.
Yeah. Yeah. No, absolutely. Got it. Good. Good. And if people want to find you, is LinkedIn probably the best spot to find you, Alan?
Absolutely. Yep. Alan LeClair at LinkedIn. Yeah. I
Perfect.
think if you
Excellent.
Google my name, that's one of the first things that pops up. I'm pretty sure it is.
Right, right. Good. Excellent. Well, look, thanks for being on the show. I hope you find your next gig or contract or project. And, what our audience doesn't know is you probably have, we've shared two stories, but you've got a litany of probably 12 or 15 or more to discuss. So I think if anyone wants to talk to you about some of your successes, there's quite a book there to get through, if they really want to dig in. So I'm really happy that you shared those two, though. I think they're really important and they're really interesting about, having compressed timelines or having to really dig through the data to see, what monkey's in the machine that's disrupting things and I find with the retirees the human behavior of like them not while you guys are trying to incentivize them to do something they're going in the other direction because of the mechanics of it, so it's pretty amazing to dig in and switch those things and get success out of that. So again, thank you for joining us today. I really appreciate having you on the show. And if there's anything we can do further down the line to help you out, or if you can assist us too, that'd be great. It's
Absolutely, Lance. Yeah, no, I appreciate you having me on the show. It's been a fun ride. I
yeah,
love, when you do things right for the client, things show up in the bottom line. That
yeah,
specific situation with that line of credit was, yeah, what you mentioned. I increased the book from by 700 million from 2.1 billion to
ah,
2.8 billion. Um,
wow,
and that's just, get people out of their own way, so to speak, right? Let's make this work in a fluid fashion for the end client. And then when you
yeah,
do that, the things stars come into alignment and it
yeah.
becomes kind of effortless. Yeah.
Yeah. And do they know afterwards who helped? Oh,
Some people
Alan was
did.
there. Yeah, yeah, yeah.
Some
That's
people
so,
did. Yeah, a lot of times
yeah,
you're the silent, champion, but
yeah.
a lot of the salespeople that I talked to, obviously they knew, and some of the internal management in the company knew.
Yeah,
Yeah.
I've had a few projects where like that where I recommend something in August and it gets shot down, and then come January someone says, "You know what we're gonna do? We're gonna do this thing and it's gonna be amazing." I'm thinking that was my idea. Well, whatever, as long as we're getting it done. But it's
It's-
funny sometimes when you a buddy of mine calls it corporate amnesia. They forgot where it came up, or but whatever. As long as the company's moving ahead on the right project and getting it done, I think the longer you're in the game, it's like as long as we're making good decisions and someone's executing on them, we'll be fine. I don't need to. I don't need all my gold stars for that sort of stuff.
for
Anyways,
sure.
thanks again. Pleasure seeing you and chatting with you, and we'll see you again soon, I'm sure.
Yep. Thanks so much, Lance. Take care. I appreciate
Yeah.
it.
Bye for now.